What do we know about this plan?
Yeah, this is another step to kind of, as you said, put a floor on the property market. We can even bring up this bar chart of this year to see the property investment is likely to have sunk again in October by 9.1%, following September's 9.1% slump. It even goes back further than this as far as the amount of investment going into the property sector. It's just one illustration of the woes in that area and the drag it's become on GDP and the overall economy. We're going to get those numbers for October later this morning with some other numbers like retail sales, industrial production, and like. I'll talk about those other figures in just a second. On the property sector, what we're learning from sources in this Bloomberg scoop is that the PBOC is preparing or possibly looking at a plan to provide at least $1 trillion yuan, 137 billion US dollars in low-cost financing to help housing market, in particular to aid China's urban village renovation and affordable housing programs. The PBOC would then inject funds in phases through the big policy banks, with the money ultimately trickling down to households for home purchases. Now, this is a project that has been spearheaded by the new economic czar in China, He Lifeng. So we'll have to see how it plays out. But options we're hearing includes utilizing the PSL, which is the Pledged Supplemental Lending Program, sometimes called helicopter money. It was first introduced back in 2014 when China had another downturn. And it allows the PBOC to provide low-cost funds through banks to developers of shantytown rehabilitation projects. They tear down the old hutongs and the like, and then build up new, taller buildings, and then have to move households into those taller skyscrapers. Developers would use that money to buy the land for the new properties from local governments, which would in turn give cash subsidies to households whose homes were demolished. That's basically PSL in a nutshell. But again, it's controversial because when it was deployed in 2014, it was heavily criticized for inflating the bubble in lower-tiered cities. So again, we'll have to see how this plays out. But right now, after we saw that bar chart of how property investment and the drag that the property market is causing on the economy, maybe a little bit of inflation in property is not a bad thing.